Happy Monday, everybody. I hope you had a great weekend. Today is September 12th, 2022, and this is your Monday market update. Let's jump right into last week's market action. Then we'll want to talk about the upcoming week. There's a lot happening this week, so we'll want to dig into that a bit. So last week we had the Labor Day holiday on Monday, so the markets were closed here in the United States. That did not keep the news wires too quiet. Over the weekend, there was some slight fireworks, but overall, the market ignored them. One of the big news stories was about the OPEC Plus and their meeting on Monday. OPEC Plus did make a symbolic cut to production of 100,000 barrels a day. That's such a small number, and it just reversed the 100,000 from the increase from the month before. So where this gets clunky is that the Saudis are the de facto head of OPEC. Russia is an important member, and as OPEC has refused to join the U.S. and the EU in condemning Russia's role in the Ukraine war, they will most certainly not come in on the side of caps on Russian oil prices. So what will happen to oil prices? We don't know, but demand, that's the focus now. We're seeing 60 million people in China locked down. As China is the largest importer of oil, demand is back in the spotlight. You'll probably see the push and pull of demand and supply news, but overall, oil is down a lot this year, but based on the world around us, we'll probably stay range bound. After all the news and the rest of the weekend noise, the markets opened with slight gains on Tuesday, but that would not hold, rolled over and had another run at it, and then failed again. All the indices were down about 0.5% on the day. The dollar index is at new closing highs for 2022 as of that time, and yields moved up too. The 10-year yielding 3.34%, and the 10s, 2s, remember that, still inverted, but less so, 16 basis point on the curve. We may see more pressure on those yields as we see an avalanche of corporate bond issues coming into the market. 19 companies launched deals on Tuesday, Walmart, McDonald's, and many, many more. They're all trying to get in before anticipated rate increases later in September at the FOMC meeting. Stocks opened flat on Wednesday as the move in the dollar was offset by a slight pullback in treasury yields. There was a sharp pullback in oil and nat gas prices. Eco data in Europe was mostly upbeat versus concerns about the growth in the EU. Let's see if the UK Prime Minister follows through with her conversations to lift the ban on fracking in her country. Remember, the focus is back and forth over demand issues and supply issues. Don't forget climate issues. We'll see how that goes. There was another article from the Fed Whisperer at the Wall Street Journal, Nick Timiraos, who reported that his sources were indicating a 75 basis point hike by the Fed at the upcoming meeting. Now, a few quick things here. First, that was more than just to put the market on. That was more just to put the market on the same side, as mostly this is what's been talked about. But the other thing is, where's Nick getting this? As I mentioned before, there's a theory that the Fed leaks this information out they're quietly so that they can gauge market reaction before they do anything. This is also what we see when we see Fed heads out floating the trial balloons to see what the market thinks. In this case, this is what they've been saying all along, and as we've said, the market just doesn't want to listen. And in some of the comments from the Fed Vice Chair Brainard that were received dovishly, and the beige book that cited slowing growth and, more importantly, slowing price pressures around the 12 Fed districts, and the market found its footing, moved up on the day. Apple event rolled out the new products. We'll see if the high end of that can hold up. Prices on the iPhones and even the watches, they keep rising. By the end of the day, the Dow was up about 1.5%, the S&P up just under 2%, and the NASDAQ was up just over 2%. Stocks opened slightly lower on Thursday after the ECB added a 75 basis point rate increase, revised growth estimates down, and inflation forecasts up, restarting the stagflation conversation. Fed Chair Powell also spoke near the open, and he once again made it clear the Fed is squarely focused on bringing down inflation. He mentioned many times that they need to get inflation down before it comes entrenched and expected in the economy. The market took all of that, Powell said, in stride, as it was nothing new, and to have comments come in without a surprise, that's a good thing. So the markets went positive by mid-morning, they stabilized, then they ran higher into the close. Highest close for the month so far. All the indices closed up about 0.5% on the day. Friday, the market opened on the high side. Overnight, there was Chinese inflation data, and it seemed to be cooling. Now, I'm not sure if anyone's actually going to pay attention to the fact that inflation in China is slowing as lockdowns continue. Now, recall that we saw that over 65 million people in China were locked down again. Once they come out, will we see those numbers rebound? I don't know. Oil demand, too, that the market seems to be pricing in these lockdowns, keeping the growth and inflation, even the oil demand, lower for longer. I'm not so sure that this is the right interpretation. We'll just have to see. Stocks opened higher and spent all day strong. One of the main drivers, the falling dollar. We spoke about that earlier. As the dollar really pulled back, the market took that as a buy signal. We'll see if that is just some more positioning. Dow up about 1.25%, S&P up over 1.5%, and the standout was, of course, the NASDAQ up over 2% on the day. That brings us to the first up week in 4 weeks that breaks the 3-week losing streak. This coming week, we'll get the CPI and PPI, and if you thought the market moved on jobs data, just wait and see what it'll do with inflation data. It's a good chance that no matter what these numbers are, and they will be closely watched and dissected, no matter what they are, the Fed is coming in at 75 basis points in the next Fed meeting this month. Tuesday will be August CPI. Remember, it's all about the Fed, and the Fed has a dual mandate: maximum employment and stable prices, or a 2% inflation rate. We're still going to be printing 8% plus year over year, so we still have a long way to go. We'll see PPI on Wednesday, retail sales, a number that we should watch closely. Not sure we will, but we should. That will be out on Thursday with industrial production. Remember, the retail sales must be adjusted for the real sales, not the inflation prices just pushing up sales. So we'll look at the headline and the core and the details. We'll see how that goes. Consumer sentiment on Friday, and that has bounced, so we'll see if it keeps things moving up. A few other items of interest. Goldman has a tech conference, the SALT conference about disruptive technology also going on this week. We'll also see the Detroit Auto Show return. So a lot of talk about autos, EVs, no doubt batteries that are going to cross the news wires. So the continued saga on Twitter, shareholder votes on Tuesday. Meanwhile, the whole thing is really stuck in court. Noise, not signal. This one is just entertaining if you like that stuff. So there's a lot to watch this week. We're off to a good start so far this morning, following last week's positive action. Stay close, stay in touch, have a great week.